white man getting richer. I don't know if y'all see this shit, but it's something wrong with this picture. But instead of knowledge of what's really going on, we steady killing our children. Police killing our people killing our people. But when 12 do it, it's the only time y'all niggas seem like y'all see it. I'm tired of working for pennies. Boy, this shit ain't living. Boy, this shit just ain't getting it. I'm focused now, new mission. The money always the motive. For a lame nigga to do some old shit. Try to run up on you, take what you earn instead of getting out, getting his own shit. Y'all lost niggas so hopeless. I gave up on you and quit hoping. You a disappointment to your family. Making dumb decisions, you know it. Generations of beautiful kids, y'all corrupt their mind, but they know it. Then they get in public, start acting out, only doing the shit that you showed them. You a terrible parent, you bloated. If you a role model, keep rolling. Don't give up now, keep going. Keep your head clear, stay focused. I ain't pro-black, but you know that I'm just a real nigga, stay facts, bro. Hide behind the trigger of that pistol, nigga. Then we know you get real tough. Y'all misguided, you need to wisen up. I'm wise as hell and not wise enough. Sometimes I feel like the dark night. In the darkest hours, I'm rising up. Talk to him, Dizzle.
Are you unemployed, retired, a caregiver, a stay-at-home mom or dad, a college student? Do you like kids and like to drive? STS Transportation is seeking bus drivers to drive for the Anniston City School System for grades K-5 through 12. STS offers the best driving jobs in Calhoun County. Benefits include CDL training, weekly pay, new air-conditioned buses, flexible hours, monthly bonuses, and you're off from work when school is out. Interested? Call STS Transportation at 256-770-4228. Again, that's 256-770-4228. STS. Come drive with us.
All right, welcome to the fourth episode of B4L Chop It Up. This episode gonna be about buying houses, insurance, life insurance, investments, some of everything. So I'm gonna introduce my guests. First, we got BJ Colbert, life insurance agent. Anthony Thomas, sell houses from Atlanta, Georgia, and Alabama, right?
Yes, sir.
Yeah. And Alan Ray, who covers the Alabama area. You just in Alabama right now, right?
No, I just added Georgia 2 weeks ago.
Just added Georgia? Mm-hmm. That's what's up right there. And of course, my co-host, CD Cordarius.
No, Mr. Cordarius Tiller today.
You Mr. Cordarius today?
Very professional. Very professional. Mr. Tiller today.
All right, we're going to start out with buying houses. I'll start with you, Alan, right? If I'm looking to buy a house, somebody's looking to buy a house, mortgage or anything like that, what would be the first steps I need to take to buying a house?
It really depends on your approach. So I look at it as it's more than one way to buy a house. You know, some people look at it as you need to find a lender first, then go through and then find your realtor. For me, the way that I do things here is I like to be like a one-stop shop. So I like to give them the information all up front from what I have. I always tell people, find you a good realtor, because a good realtor also has lenders. They also have insurance agents, other things, because they've networked with other people. So I always say, you know, find a realtor, and then what we would do is look at your credit score. Some people go directly to the lender to get their credit scores. I like to look online just to make sure that there's not something that they need to do to improve their credit scores. Mm-hmm. And then from there, if your credit score is where it needs to be in order to qualify for programs, we'll go ahead and get you to a lender. And then at that point, it's more so just, you know, following the steps of, you know, getting your pre-approval, finding a home, and then making an offer at that point.
Okay. Because a lot of people think it's hard buying a house like with a mortgage and stuff. Would you say it's easy or it's hard?
I say that it is as hard as you make it out to be, because at the same time, you're not renting, but at the same time, most landlords these days, they pull your credit. So you're pulling your credit in order to look at, you know, to get a rental. Why not look at getting a buying a house? Because whenever you spend that money on that rent each month, you're not getting it back ever. Mm-hmm. You know, so if I done spent $20,000 in the past 10 years renting a home, that's $20,000 I could have put into a house, you know, that I could, if I ever decided to sell that house, that's equity that I can get back. Mm-hmm. You can never get back anything that you rent.
Cause that money gone. You ain't
Always
getting that
gone.
back.
Yeah, absolutely.
Yep. So hey, I know you flip houses too, don't you?
Correct. Yes, sir.
How do you is that an easy process or like a hard process?
I think it's definitely more challenging than buying a home to live in, but it's also a greater reward. I think it's a great way to obtain generational wealth. I grew up right over there in Glen Eddy. My mother never owned a home, so it was something that during my pursuit to trying to acquire wealth, it was the one common denominator of everybody that I knew with my mentors where they were attaining their wealth. They all had money tied up in real estate at some point. I've tried a lot of things to make money. I've lost a lot of money trying to make money. I think a lot of times when people are trying to make money, we glamorize whatever it is. We never talk about the negative aspects of things. He knows. I was really successful with the nightclub business in this area, but then I started trying to do concerts. Lost a lot of money.
Yeah.
I never talked about that. I always made it seem like it was good, but I could be honest today to say, hey, I lost a lot of money doing that. And so I just wanted to try to get into something because I didn't want to keep going down that path, and so I wanted to get into something that I could continue to generate wealth with, and that's what I've been able to do with acquiring real estate.
Well, what club did you have?
I did 231, so I was exclusive by the time they closed.
You was doing 231?
College, all the college,
Loose in 231.
He was doing everywhere.
all the college, you had to go through me at one point to get a date if you were associated with an organization from JSU. I had a really good relationship with Mr. P, developed that through the years. He made a lot of money, and he taught me how to do the same thing. And kind of not to get too wordy today, but I think that's the thing that you all have to learn. We all have to learn to do is not look at money as just a way to spend and acquire things. But if you start looking at money as a way to actually take money to make more money, then you'll look at it in a totally different perspective. And that's what I did. I would invest in nights, ahead of time, like the homecomings, the first parties, the nights that would make $20,000 in cash some nights. I would buy them a year ahead of time. So that was an investment. So that was just my stepping stone. I didn't realize at the time that's what I was doing, but I was taking money to make more money. And that's what you see anybody who invests in anything, not just real estate. You're just trying to take a certain amount of money and grow it, snowball it.
Right. How long did you do the nightclub?
I think I got probably like 09 is when I did my first party, but I really started rolling about 11 to about when they closed, maybe like 14, 13, somewhere in there. So I had a good run.
We had some nights in 231, didn't we?
I just told you got loose in 231.
231, you used to have to wait in line like 2-3 hours just to get in there.
See, that was by design. I can say this now because, if you were waiting in line, we had a back door that we could make more money. And, that's just the name of the game of any club. Every club does that. I think the culture is different here versus in Atlanta. People expect to do that in Atlanta, but we really got a lot of flack from doing that at 231 because people, it's just not the culture here to wait in line.
Yeah, exactly. BJ, you sell life insurance.
Correct.
How long you been doing that?
Been doing it about a year now. Yeah, been researching what I could do from anywhere. Me and Ant go way back.
Yep.
And we done talked about a lot of things over the time, and I wasn't sure if I was ready for real estate because of my 9 to 5. My 9 to 5 paid me pretty good. So I had to find an avenue to where I could make money from wherever I'm at. So I took the knowledge of what I learned from a couple older mentors and got into life insurance. I got into something that I knew I could help myself financially and also help the community. So yeah, I've been doing life insurance about a year now. I've learned a lot of knowledge over this year. And the only thing I'm trying to do is spread the knowledge.
Yeah.
And bring some more people along with me.
I just watched the episode with you and Mr. Bates. I watched it last night.
Pretty nice episode.
So why is it so important to have life insurance?
It depends on, to me, first of all, we got to make sure we protect it. Make sure we taking care of our family and ourselves at the same time. But just like these gentlemen, when you buy a house, you're setting up your family for success in the future. Same thing with life insurance. If you understand how to use it, you can protect yourself and your family, and you can also put some money back for your family for the future. And that's what I'm really trying to get out there. I know a lot of people have their $5,000-$10,000 burial insurance to make sure they get buried, but I'm trying to help you understand how to acquire some wealth through it.
Is having life insurance with your job enough, or do you need more?
It's not enough, never enough. But you should have it with your job. If they're going to provide for you as a part of a package, yeah, definitely take it. But you need enough insurance. We call it the dime method. You should be able to have your debt, your income, your mortgage, and the education of your kids all tied into the amount of money you need for your life insurance. So if something ever happens to you or your significant other, that life insurance should take your place. Of course, you can't throw the ball with your son or take your daughter to a first dance, but it's a stepping stone that should be in there that should allow you to, your significant other should be able to continue their life. You don't want your significant other trying to replace you with another guy within a year because they need the extra income.
When's the best time to start?
Now. Yesterday. Yes. But it's never too late, so come see me.
I think just I'm not an expert on life insurance, but I admire brothers like you who try to teach us, because that's something that we didn't know. I didn't know. And a lot of people do think that they get set up with their job, that's enough, but most of the time you don't stay with a job till you retire. Sometimes you run the risk of losing it when you quit your job or walk away. Sometimes they give you options to keep it, but
it make it so high that you don't want to keep it. Yeah.
I think I saw that when I was a social worker before I got into real estate. I did that for almost 10 years, and I worked with the elderly and disabled. So I saw a lot of people who had like $10,000 policies, but their premiums were so high that I remember one of my clients, her premium was like $200 a month, and it wasn't even active. She couldn't even use it for a couple of years. I did the math. I'm like, man, if she just would have saved that money, she would have had $10,000, and so I think it's important that we talk more about that. So
my grandmother paid $35 a month for an insurance policy for 30-some years, and nobody was going to challenge her or ask her about her insurance policy. But when she passed away, she had a $5,000 policy. Let's do the math on that.
Right.
It don't make sense, and that's what really turned me on. Like, man, there's people out here. I'm not gonna be your briefcase walking up to your door, knocking on your door. I'm gonna hit you on social media. I'm gonna hit you in Walmart. We're gonna talk.
Yeah.
And I might be dressed up in a button up, or I might have on a Adidas suit. Whatever I have on, I'm gonna talk, and I want you to understand what we're trying to accomplish.
One thing about you consistent. You hit me up all the time.
Probably over 20 times, but it's okay.
Yeah. You stay consistent. I know what thing. Like I know, like the past 2 years, why do we wait so late to start think about stuff like this? I know, I just not got into it like the past 2 years. So I'm like, why you think we got that mindset that not to start early, but we start late?
We don't know what we don't know.
Yeah, we don't know. Then a lot of times it comes about. So like when the pandemic hit, I feel like a lot of people started investing because it was the popular thing to do. It wasn't necessarily saying that it was, I need to invest. It's more so people trying to put it out there and people trying to advertise it and stuff. With some people trying to do it to get over and get money. But I think a lot of times for us, we've been in a survival mindset all these years. It's never been about doing stuff to make us better. It's just more so, I need to work 9 to 5. I need to make this money for 40, 50 years, and then if I retire, I retire. If I don't retire, I'm going to keep working till I die. And so my mindset really has been, after I started seeing people that I love die and realize they didn't have no money, they didn't have no life insurance, they didn't even own their house. So I've been like, well, you've been paying thousands of dollars each month all these years and got nothing to leave your kids at all. And so my biggest thing was I want to make sure that I want to learn about making sure that, real estate investing and buying homes and setting up generational wealth, which is the big thing for me. And from that point, it's just been so for me, whenever I talk to someone about buying a home, it's not just simply about buying a home. I want to create a mentality that you understand that you can create generational wealth for your kids, for your family, until you can leave something. And I also try to sell them different things. Like, hey, make sure you talk to somebody about some insurance. Make sure you're getting the right home insurance. They might have a better car insurance for you. I also talk to somebody about life insurance, So I try to tell people there's more than one way for you to create that generational wealth.
So, go ahead. You about to say something?
Yeah, real quick. I think as realtors, we throw around the term generational wealth a lot. I see it a lot on social media. And I think it's different levels. I think we need to do a better job of explaining what that means. Just buying a house doesn't simply create generational wealth.
Right.
But I've seen I can speak more from the Atlanta market. I'm not really, I don't do a lot in Calhoun County or just Alabama anymore. But Atlanta right now is just it's a market I've never seen. Like on my way here, I was reading a text message from my group. I'm in my brokerage that I'm with in Alabama. In Atlanta has 2,100 agents. One of them posted that right now what's going on in the market, and I'm sure it's happening here, is just a crisis with no inventory. Quite naturally, when you have a bunch of buyers and no inventory, it creates more of a demand. And one agent, she posted that the house was, I believe, $225. They wrote it for $245 with no closing costs. Someone wrote for $245 and a guaranteed the offer. Like they took the appraisal contingency out, which means that if the house appraised for $225, they were going to pay $20,000 out of their pocket for the difference. That would be like you buying a $20,000 car for $40,000. But the difference is, at least with the value of a home, property only continues to ascend in value. A car is going to depreciate as you continue to drive it. We drive out the lot. So that's kind of a bad analogy. But that's what's going on there a lot. Like, the era right now, where we're in right now is if a house, you remember, I was BJ's agent when he bought a house.
Okay.
Buying a house right now would be so stressful. Like what you
got in when it was good.
What you experienced, and I guarantee you have a bunch of equity right now. It was pretty seamless, right? We went and saw a couple of houses, and we put our offer in, and it wasn't no bunch of back and forth, was it?
You think that caused the pandemic, or
it definitely it played a pivotal role in it. So rates, it was kind of like we had an adverse effect of what they were trying to do, where they lower interest rates to incentivize buying, and it did that. But you had a bunch of buyers, just people who were on the fence. They decided they wanted to buy, and so last year we had a really great year with real estate. But I don't know what's causing the issue now because there is no inventory. And so because there is no inventory, you still have this big influx of buyers coming on the market who are trying to take advantage of these historically low interest rates. It's causing bidding wars. So even though they're getting a lower interest rate, they're paying a lot more for houses. So it's still having an adverse effect. And so I don't know, Alan. I don't know. Just talking to some Atlanta agents, we're just trying to figure out what has really caused this shortage. I don't know if it's a lot of buyers are apprehensive. I kind of said at one time, last year, I noticed a lot of sellers didn't want a lot of people in their houses because of the pandemic. You can understand that. You know, with COVID going on, they didn't want you touching. We kind of strategize how we do things. Leave all the lights on. Don't touch anything. Wear gloves. Wear masks. Lysol. But so they kind of got past that last year. So I don't know what's causing it. I do know one thing that's contributing to Atlanta is we have a bunch of cash buyers. I sold an investment property that I own Friday. Yeah, Friday. I had like 300 in. I sold for 375. The buyer came from New York, so I'm seeing a lot of New York and LA buyers coming back to Atlanta for various reasons. But the number one is Atlanta, LA, and New York is so expensive now. Atlanta's a major market. We're number one in movie production currently. We're overall, LA produces more, but because it's so affordable, we shoot a lot of movies in Atlanta. And of course, the cost of living is lower, taxes and everything. So that has incentivized a lot of the movie production there. So I don't think no one has an answer to what's really causing it. But we do have a lot of cash hedge fund companies right now buying property. They're buying cash. I sold a property in Birmingham 2 weeks ago where a cash hedge fund company, they buy properties, they put renters in there. They charge them an absorbent amount of rent, and they bank on them to continue to stay there. And then, of course, they give them an option to buy, but it's going to be so much more expensive. So that's playing a pivotal role in the inventory, too, because they're not reselling. They're holding them.
They're keeping them.
They're keeping them.
You see the same thing over here?
I was about to say, right now, I'm seeing them more head this way than it has. At first, it wasn't as bad. When 2020 hit, it was more so people just grabbing inventory, grabbing houses. But now it's really starting to get to the point where people are starting to bid. They're having to bid over. I personally haven't had to bid over yet, but I still have seen it where multiple offers have been on the table. So you can't lowball, to try to get a better deal in a sense than you would before. So it's definitely, and I've seen a lot of that with investors too, because my phone has been ringing off the hook for a lot of investment properties that I have listed here in Anniston or in Birmingham. So it's interesting to see that people are, even with this pandemic, that hasn't stopped people. It's actually made people want to buy things more. So it's been interesting.
So you say the pandemic helped you?
Oh yeah. The pandemic definitely has been great for me. When I came into being a real estate agent, I became a real estate agent because I had a bad experience. So when my wife and I were trying to buy a house, about 5 years ago, no, about 6 years ago, we had an issue where I felt like the agent, one, they didn't care. They sit up here, basically looked at my wife and I like, oh, you young, whatever, I don't care. And they sort of treated us as if like we didn't make money. I'm like, well, we have a decent job, we got decent credit. Why you acting like this? So I ended up changing to a different realtor, but I still felt with that realtor, I didn't get the full package. And so by the time I got to deciding that I wanted to become a real estate agent, which really was based off because I wanted to be a real estate investor, that was really the first part of me wanting to do this. But once I got to that point, I realized that as a realtor, you have to be proactive. You have to be caring. You have to be sort of like a hub for your clients. So instead of me being, well, I don't know, you go find this other person or you go find your own lender, I came to the point where I have my own preferred lenders, have my own preferred insurance people that I use. Not to say that my clients can go wherever they want, but I at least tell them, hey, I've worked with these people. I know how they are, and I treat you fairly. I had a client the other day, and we had been working on the credit for probably about the past 6 to 9 months. She came to me, her credit was in the 400s, and which credit repair is something that I offer, but it isn't something that I exclusively offer. It's just something that I help out my clients to understand, okay, this is where your credit is, and these are some steps you could take in order to build your credit up. So we did that. We got her credit up to 675 from that point, about 9 months total. But when we got to the lender, they said, hey, you got collections on here that you need to pay off. So I was like, that don't really add up as far as, because most of the time I have clients with collections and we still go ahead and get pre-approved and all that. So I went to another lender. They said, no, we want to approve you at all. Then I went to a third lender, and she gave my client the best deal that I've seen probably in the past 6 weeks. And I was like, it really just depends on who you're networking with to me. And that makes a difference.
It's a process.
Absolutely. It isn't, some people think that, especially in our community, we haven't been taught the ways of how to establish credit, how to make sure that our credit, paying bills, and just because you got a collection, oh, don't worry about it, or I got this credit card that I'm paid on, but I ain't paid the monthly payments and all that. So I try to teach people that, hey, if you want to buy a car, if you don't have the cash for it, you're going to need credit. Or if you want to buy furniture and you don't have the money, you're going to need credit. Not saying that cash is power, but at the same time, you need to have your credit at a good point.
Right. So how do you think we stop the trend of starting off with bad credit? How do we, we all got kids, and we all want our kids to start off with good credit, have a good start, whether they going to college or not. So how you think,
Man,
would you?
That's a good question. All right, I can speak from my own experience. My mom didn't teach me anything about credit. And it's not, my mother was a great mother. She worked at the depot for 35 years, but she didn't know what she didn't know. Again, so us having these conversations is a start. These conversations are not as exciting as like the basketball one, but it's not going to attract the younger crowd.
They're going to attract the right crowd.
Right. They're not there yet. As they get to the mid 30s somewhere, then it starts to intrigue them. But I can say, it all starts with just getting people, like, everybody needs a mentor. I preach mentorship. My mentor is who taught me how to get on track. Even now, having financial advisors for my daughter. I have a daughter that is 16 this year. So what we'll do to get her started with her credit is we'll add as an authorized user to one of our credit cards to get us some credit history going. See, these are things that we didn't know about.
Yeah.
What's
not to cut you off, what's the youngest age you can do that?
I believe it's 18.
18.
I believe it's 18. And so she can already be attached. And I won't give her my card, but I'll give her access to my credit. And so she can start there, and she can go into her 20s with credit. Because like you said, cash is king. It'll always be king.
Yeah.
But I mean, if a house is $200,000 and you don't have $200,000, right? How many years would it take you to save to get $200,000? And this is another thing. As you're saving, hypothetically, it's in theory $200,000 to save for the house. By the time you're able to have that house is probably worth $400,000 now.
Exactly.
I got invited to this panel one time, and that was the thing. It was renting versus buying. And we had financial advisors that was encouraging renting, and I wanted to know why. So the first question I asked her, you can't leave people where you're not going. So it was only one advisor that was advising to rent. I asked her, first question, do you rent? She said no. So why are you advising people to do something
Exactly.
that you don't do?
Exactly.
And so her thing was telling young people to save 20% down for their first payment, which is a big misconception in real estate. I'm sure you get that question all the time. I say buy as soon as you can, acquire that equity. And her thing was she told the first-time home buyers to save their money. Well, she was talking. We were in Buckhead. Buckhead is the most expensive part of Atlanta as far as real estate goes. Most first-time home buyers won't buy a property in Buckhead. But with that being said, 20% down on, let's say, a $200,000 house, you're talking about $40,000. The average person can't save $40,000 realistically. So if you are working towards saving that, how long will it take you to do that? And by the time you do that, even in Atlanta, I've seen houses jump $100,000 in value in 1 year. So if you were saving for that $200,000
You'll never get there.
you're just climbing out of a hole that's continuing.
You're getting deeper and deeper.
It's like a bucket that you're climbing out, but the water continues to rise. So I thought that was just atrocious that she was telling people to have that kind of mentality. And I say get in one as soon as you can. Get yourself together, like he was saying, work on your credit. Don't put yourself in a bad financial situation where you're paying high mortgage insurance or a high interest rate. But you do want to get into something because it's going to gain value. And that's what I was talking about with building generational wealth as far as just watching the value go.
Yeah. So
Financial literacy.
What are some
Financial
of the
literacy.
things you do, BJ? You don't have to get personal, but some of the things you do
Well,
to help your kids.
the
be in a
main
better
thing was what he
position.
said: add them to your credit cards.
Yeah.
The young ones, but when they get to the age of 18, but even the ones that's a little bit older that may not have everything in order, you still can add your kids to your credit. That's the first thing. Everything that I learned, my kids gonna know. And I'm never acting like I've been doing this for years. I just got myself in order, and it took me a little while. I had cash my whole life because I always done found a way to find a job or a hustle on the side to get me some extra money. But at the end of the day, you need to have good credit.
Yeah.
And once I prepared myself for the home buying process, and I realized that you got a little money to put up from the club or from the T-shirts, whatever I did, but when there was time to get the house, they want you to have good credit. So I started preparing myself, getting myself together, and then I got my house set up, got my credit in order, and now my goal is to teach everybody else the things that I know. And that's where this financial literacy come in at. That's where the life insurance comes in at. It's a lot of different avenues to where we can fix our credit and prepare ourselves for the future.
So somebody that's trying to fix their credit, how do they start that process? What's the best way to start that process?
Best way is you need to find some kind of search engine that gives you the scores that you need, and there's so many different avenues. Some people use Credit Karma, which I highly do not suggest for anyone to use Credit Karma. There's places like myfico.com that you could use, but really there's two ways. Some people will also even go to their lender and have the lender run a CAVERS report that'll basically show everything that you don't see on a credit report. Sometimes it's listed on what's called a CAVERS report. And on that, you can see sort of some things that you need to work on. It may be student loans that you haven't paid on that doesn't necessarily show up on your credit report, but it will show on that report. But I think the main thing is you have to find somewhere to start. If you don't start, you won't never get there.
Right.
And that's the other thing. Some people, they'll just sit up there and wait till 1 month before they want to buy a home and say, hey, okay, I'm ready. No, you're not ready. This is a process that really takes time. It sort of snowballs into sort of events. I tell people, if you want to buy a home in 2022, you should be starting now. You should be go ahead and looking and make sure that your credit's fine, you're good, finances are good, because some people who own a business want to buy a home. Well, you can do that, but you have to make sure that there's certain things lined up in order for you to do that. So I think that's the main thing. You have to start somewhere.
Yeah. Okay. So before we get started back, I want to take a minute to shout out Shay Hurd. She got the business, bringing the bar to you.
For these marvelous drinks.
The marvelous drinks. Appreciate you coming through. Ray, you mentioned stocks earlier.
Ooh.
And I know you got a group on Facebook that you talk about with stocks with and stuff. During the pandemic, like you said, a lot of people jumped on stocks. Like, how did you get into it, and how has it benefited you?
So stocks is tricky, because there's two ways to look at stocks. You got short term and you got long term, which I have a group, Go Hard Investments, on Facebook, and that's also my business, Go Hard Investments LLC. But the focus really for me wasn't necessarily trying to, get some stocks to make money real quick. It's more so trying to learn about the process, how companies, put their market on the stock exchange, how the prices go up and down based off buying and selling, or news dictates things as well. So here recently I'm getting into the cryptocurrency, trying to learn a little bit about that. But I'm no expert or anything like that, but I just look at stocks as a way that, to get into equity. And I look at not just stocks in a sense, but I do mutual funds. That's something that I started for my daughter. As soon as she was born, I got her a mutual fund. So that'll be her money that I'm putting into and investing in, so that at 18, if she decides that she want to take that money and do something else with it, she could. And then I also, 401k. That's really another investment tool for stocks, because basically what they do is they take that money and they invest it into a certain portfolio, and then as it grows, you get money back or you don't.
Hey, I hear you and Anthony keep on bringing up equity. Y'all want to elaborate on that, break that down, let the people know what that means?
Sure.
No, you go ahead.
So equity is anything in value over what you owe. So let's use a house for an example. I use a house that I sold Friday. The house. This is a good question, because actually this house that I sold Friday, I sold for $375. So it's bittersweet because this house is really worth about $500. So equity really is what somebody's willing to pay you for something. Not really because we talked earlier about people paying over value of houses. So equity really is whatever you owe in the loan and what you have in value. So if you have a house that you owe $100,000 on, but it's worth $150,000, then you have $50,000 in equity in that home. So that's what equity is.
That if you sold it, that's what you would get back.
Hypothetically speaking, if you could sell it for that price. My house Friday, I want to be transparent. I didn't lose money on that house, but I didn't make nowhere near what I wanted. It was on a busy street. Beautiful house, man. I really did it nice, but you couldn't get in and out of the street. One street over, that house is $500, would have been gone in a couple of days, like literally. So value and equity are two different things, because value really is the most important thing. What somebody's willing to pay you for something versus what it was. Like Buster's jersey back there. In the mall, probably, I don't know, what jersey sell for, like $125?
Yeah, somewhere in there.
But because it's autographed, and the value of it could be worth $1,000, $2,000, what somebody's willing to pay for something. So that's really what. So equity and value can be two different things, but equity creates wealth at the end of the day, and I see it all the time. Friday, I had another closing. I'll just say this: a couple that was not of our race, they buy and sell houses all the time. That's something they've been doing for a long time, and they are aware of the value. They made money off selling this house. They made money off the equity. They cashed the equity in on Friday. My client bought the house, and they put it back into a 1031 tax exchange, which is a way to avoid paying taxes over and over every time you sell a property. So they were well versed when it comes to equity and what to do with it, because capital gains taxes comes in. More money, more problems. You start dealing with those things, and that's why. See, this is all about levels. Yeah. It's like math. When you learn numbers first, then you learn how to count. It can go as advanced as you want it to go, and so that's why we're playing as a community and as a race. We're playing catch up, because it can get as advanced as you want it to be. I was talking to someone recently, and they were talking about how they cut down on paying capital gains taxes, and it was so simple but profound what they gave me. So it's really important to get around people who can pour into you, as opposed to you thinking you know everything. I definitely never come off as that. I always want to learn. I'm still learning, man. So
I always want to learn.
Yeah.
You ain't trying to learn. You gonna go backwards, because you can't be the smartest man in the room.
No,
you can't be.
No.
So buying a house versus getting one built.
Okay. Buying a house versus getting one built, I think the different levels of that. It depends on the builder. Some builders will let you go as custom as you want. It really boils down to price point. The higher the price point, typically the more leeway you have with getting the house built, There are different types of process to buying a house, new construction. You can go with a builder. Like I'm going when I leave here, I'm going to Birmingham to show some of D.O. Horton's properties to a client. So that's a tract builder that comes in and gets a property, buy land, they cut it all up, and they sell houses. You really don't have a lot of choice. You may be able to pick a floor plan, but it's not as elaborate as some of the custom builders in Atlanta where you can pick out everything that you want, even the floor plan.
Basically design the house.
Design a house based upon your budget. So it's different levels to that. You can take a loan and buy a home. The process is pretty much the same. You just don't close until the house is finished with a new construction home. Like, assuming my client goes under contract on one of these houses, I think they'll probably be done in like June, July. So once that house is completed, then she'll be able to close on that property. So, yeah.
What should your credit be at to buy a house to get a good interest rate?
And your recommendation.
Well, that's a tricky question because you can get a loan. You really can get a loan at 550, at a 550 credit score, but your interest rate won't be that good, and the same thing, you have to put 10% down. Truly, if you want a decent rate, you need to really be above the 620 to 660 range.
Always heard 640. Always heard 640.
Yeah, 640
was
is a good number because for Alabama you have down payment assistance programs. So at 640 you can qualify what's called an AHFA, which basically what they do is they'll finance the home and they'll do a second mortgage for your down payment. You'll pay that down payment over 10 years, but at the same time you sort of lose money because you're still paying interest off that. But for people who don't have money or who don't have money but want to get a first-time home buyer, a lot of times that's a good way for them to get a home. So it just depends on where you're at financially.
So if I got a 700 and he got an 850, is his interest rate gonna be?
Oh yeah, it's gonna be way better.
Way less than mine.
Yeah, it's gonna be.
So 640 or 660, that wouldn't be an ideal score.
It's a good score. I mean, but definitely the higher you go, the better your interest rate for sure. And it also depends on your use because if you're getting a home as an investor versus a home buyer, you'll have a different interest rate too, depending on the lender that you go with. And there's so many different programs out there for people who need down payment assistance. But of course, if you're someone that don't need down payment assistance and you get a home, the more money you can put down, that'll help you too. So, like I said, it's different ways. You just got to really look at it, what's best for your situation at that time.
Right.
Every agent has different techniques. I personally try to avoid down payment assistance. Because like he said, over time you can spend more money. It's other caveats to that. Like if you sell the house within a certain period of time, like in Georgia we have Georgia Dream. That's a program where if you sell it within 5 years, you're paying the money. You're technically borrowing the down payment. They give you a second mortgage. I don't use down payment assistance, but I do use 100% financing, which is where they give you all of the money. You don't have a down payment. So it's stipulations on that too, but I personally think it's a better option. We all have different techniques of how we do things. Because I have had a single mother. She absolutely had no money. I wasn't using 100% at the time. I still thought it was better than her continuing to rent. Yeah. So I still think that down payment assistance is better than continuing to rent and letting the house, increase. And so next year when you decide to buy a year later, you're spending $20,000, $30,000 more. Right. So it's like he said, it's different levels. If my credit is not a 700 or 750, I think it's still more ideal. Maybe you want to refinance. Go ahead and get in the house, continue to work on your credit score. Be honest with yourself, though. If you know you're not going to get in there and work on it, continue to improve it, what's the point? Be honest with yourself about what your capabilities are. Sometimes it takes sacrifice. Take that income tax refund that you get instead of buying those rims, cut back, and pay down some of that debt because that literally can be an investment. I've seen people with lower scores have higher mortgage insurance. Mortgage insurance is protection for the lender in case you go into foreclosure. Not to be confused with homeowners insurance. Everybody needs homeowners insurance. And then also the interest rate be a little bit higher. So you could be spending $700 more a month on stuff that's not even going into the actual principal of the loan. The principal is what pays that loan back down. Right. So invest in your business. It's your business pretty much. You buying a home can be your business. That's how I look at it.
Right. So a 15-year mortgage versus a 30-year mortgage.
That's a good one. I personally, I'm not a fan of people doing 15-year mortgages. I think that, of course, you get a lower interest rate, but I think I'm a worst case scenario person. Okay, I still think from when I lived over there. Okay, what if tomorrow, I got hurt at my job, but I didn't have any leave, and so my 15-year mortgage which would have been higher than my 30, and I'm putting pressure on myself to come up with that extra money. Now, for people who say they want to pay their mortgage off sooner, you still can do that with a 30. It's no prepayment penalty, which means that you can contribute more money per month to that loan to pay it down sooner. Yeah, you have a slightly higher interest rate, but you're not putting that pressure on yourself to have the higher
15
payment.
versus 30, are they basically doubling it?
They don't double. You don't get a half. Your interest rate is not going to be in half, but it is incentive in order for you to do a 15 versus. It's a significant difference in the interest. But again, if your goal is to pay it off sooner, just pay more towards it. But when you do that, make sure that you're actually applying it to the principal. One thing about a loan is like a seesaw. If you got a 30-year loan, the front end of the loan, car loans work the exact same way. They're amortized, which means your payments don't change, but where the money goes in the loan does. So on the front end of the loan, it's like a seesaw. All the interest, if you're paying $1,000 a month on your payment, then most of that's going to go towards the interest. It's not actually making a dent in the principal. Right. The principal is paying the loan down. Right. So as the years go by, it's going to level off. Then towards the end,
then you get into the value.
You start. So every month, you are making a difference in the principal, but not as much in the beginning. And the reason why, that lender knows that the average person doesn't stay in that first house or any house more than 5 to 7 years, especially the first one. So they want to make as much money on their loan as possible. Just like cars. That's why when you're making payments on your car, it's like, man, my car payment $400 a month, but I'm really, next month I paid $400. You think if the car was $5,000, theoretically speaking, you think if I'm paying $400 a month, then if it's $500,000 balance, next month I owe $4,000, $600? Right. That's what you would think, but that's not how it works.
Interest
is what they're going to make off loaning you that money.
So is it like I know, like when you buy a car, you got a payment, and when they say it was due, when your statement available, interest you start paying interest before your payment is due. Like say your payment is due like on the 25th, but your statement is ready on like the 7th.
So you
do your interest kick in between the 7th?
Your interest. It started as soon as you took that loan out. Mm-hmm. It kicked in. So again, that lender, it's a business within itself. That lender is making money off lending you that money. So the longer it's kind of established in the beginning, but yeah, you paying that every month. Like I use private money for my loans to buy my investment properties. I don't use banks for my investment properties. I guess we can kind of talk more about that in the next episode. So I'll use my example Friday. My payments on that house were like $2,500 a month. Interest only. Which means in that case, I was making payments and it wasn't going towards the principal at all.
At all. Mm-hmm.
See, private money is a higher interest. Mm-hmm. And the more deals you do, then the lower interest you'll get with that. But that's the drawback to using private money. Mm-hmm. But some investors like to use it because you have a lot of entrepreneurs that don't file taxes or they don't file it as much as they need to. Somebody may make $300,000 a year, but they don't want to show it on paper. Right. And so therefore they may not be approved for a loan to go out and get a bank loan. Bank loans are more conservative, which means that they want to get more in your business. It's a whole process. As a private money lender, sometimes they don't even require tax statements. They want to see your bank account, and they may want to see a couple of bank statements. But they kind of look at the history of your finances more. Mm-hmm. I mean, we could become private money. Mm-hmm. All together could pool money together. Absolutely. 20 is what 1, 2, 3, 4, 5 guys here. If we all put 20 up, somebody wanted to buy that building over there for $100,000. We could put 20 together. We could become a private money lender. Just charge them interest only or whatever we wanted to do. We got to get out of this mindset of thinking that just banks lend money. Exactly. And real quick, because I don't want to dominate the conversation, investors. Get started if you want to get into it. Get started as soon as possible. You don't have to have $100,000 in the bank to buy money. I believe in leverage. I use another agent that I know personally as an example. I get frustrated with her because she buys one property at a time. She takes her liquid capital and she'll buy one property. She'll work on it, fix it up, finish it, then she'll sell it. Me, I want to take leverage. I believe in leveraging other people's money, just like the stock market. Mm-hmm. Walmart doesn't really need people to buy stock in their company. Mm-hmm. They can do whatever they need to do. Yeah. But who am I? If I'm not smarter than Walmart. If Walmart wants to take somebody else's money and
use it,
if you don't have anybody to teach you anything, just sit back and watch other people and how they move.
Yeah.
You know, I might not want to teach anything, but if you study me hard enough, oh, well, he buying on the west side. There must be a reason he's doing that. I'm going to find out what's going on the west side.
Right.
You know, that's what I do. You know, sometimes people don't want to give you information, but you can follow their trend. So, you know.
Yeah, that makes a lot of sense.
Yeah.
So what area you cover mostly?
I'm all over. I don't cover just one specific area. When I first started, I thought I'll do Calhoun County, but I sell in here, Gadsden, Birmingham. Just had a deal over in Brunswick, Georgia, as well. But I mean, I cover whichever area as long as it makes sense.
Is getting a house built more expensive than buying?
It can be, but
depends on what you want.
It depends because the price of materials can make things a little difficult. So, and then it also depends where you're building. If you're trying to do a custom home on your own private land, it can get expensive, but it just depends on your builder. It depends on where they're getting their materials from. Some builders, they charge extra money because they want to make more money off of you.
Mm-hmm.
But if you're buying somewhere that's in a community, that's a planned community, most of the time the prices are going to be somewhat similar. Just maybe, like you said, a different house plan. The finishings may be a little different, but those are typically not that bad. But it just depends how custom you want to get. Right. And they also have to look at it as, does it make sense longevity-wise, as far as building equity in a home. Because my home, I had it built 2017, and at that time, price of materials was low. So now my house is definitely worth way more than it was before, almost $100,000 more, because of the fact that the market, the area, so where you choose to build does matter.
Would y'all advise buying a home or get one built?
Like he just said, it just depends on your preference.
Your preference.
Because even that can get as involved as possible. I just had an agent. Well, he's not an agent. He's an investor. They just built a house, and I'm selling it for them. They work with a custom builder, but that same builder will build you a house. You can call them, and they will build it, based upon everything you want if you're willing to pay for it. I use the same builder. So the house that I closed Friday that I sold, she did the renovations on that house. So it can get as involved. It really boils down to budget. Budget is going to drive anything that you in your choices.
Okay.
So I know you flip a lot of houses, and I watch a show, and I be looking at how much them houses cost. I said, ain't no way they using their money.
They not.
So
They're not.
how you do that?
But that's
like,
what I was talking.
Not you personally. You don't have to do it.
Yeah.
Like,
I use myself. I don't use my money. I used to. But what I realized, I was stretching myself so thin. Think about it. If you have $200,000 in the bank, it's not many houses. Well, in Atlanta, I'm speaking just from Atlanta. When I moved to Atlanta, in 2015. You could buy a house for $100,000. It doesn't really matter where you're looking at right now in Atlanta. You really can't find a turnkey home in Atlanta for $100,000. So of course, as real estate gets more expensive, it takes more of your money. So those people who you see on there, they even say it sometimes. Well, they stretch themselves thin on maybe a business credit card, because sometimes you can borrow the money and not borrow enough. When it comes to renovating, real estate has become so glamorized. Okay, to where you get people on Instagram, they posting their clothes and their sold signs, but sometimes you really didn't even make no money off that deal, or you ran around so much with that client to where, but you're not gonna get on there and say that.
You're right.
And I think it's a fine line there, because I want to be honest, but I don't want to come off as being negative. With that realtor right there, he's always complaining. There's a lot of people getting into real estate right now as agents, and they think that it's just they're going to make a lot of money.
Yeah. Right.
The average agent in Atlanta makes $30,000 a year. Now, $30,000 a year, when you paying for your own signs, your gas, and this, that, and the other, that ain't a lot of money when you start cutting in some of those profits. Now, don't get me wrong. You can make. I'm a top 5% producer in Atlanta. I was still 31 in my office out of 2,100 people last year. And I did like 11 million in sales. I was still 30.
In your office?
Yes.
Man.
So I did like 10.7, and then I did like 300 here. I don't do a lot in Alabama anymore. So I still was 31. I was 28 in Georgia, 31. So that means there were some people in there. Georgia just had their first agent do 100 million in 1 year. That's a lot for one agent, which of course by that time he has to have a team and things of that nature. But I want us to be honest about a lot of agents right now, what's the point if I have 10 clients and I can't get none of them on the contract because everything we're bidding on, I have a couple right now, we probably put out 20 offers. And we're conventional. FHA buyers, they're really getting looked past. My clients are conventional. We still haven't nailed. So I'm having to be innovative. I was gonna buy this one house for cash and just sell it to them, but then I realized the payment was a little bit higher, payoff. So I'm just gonna sell it to them and just work both sides. You know, so they get a house and we don't even have to put it on the market in order to expose it to more bidding wars.
Yeah.
So that's we got to be that innovative over there right now. It's crazy. I'm telling y'all, it's every market's different, and it's so hard to work with a buyer who's coming from another market out of town. Well, it's not like that where I'm at. Well, you're not buying there. You have to focus on where you're buying at.
Yep.
You know, it's a big difference. Just told someone coming from Cincinnati, and they was talking about how, well, we didn't have to do that there, but you're not buying there.
Yep.
Focus on where you're buying at.
Yep.
You
You
know?
gotta make that transition.
Yes, it's a total difference. It's weird, man. A Bentley may cost the same in Georgia as it may be, maybe a little bit different. They may get a little deal on one in LA or something. I don't know.
Right.
But houses can be totally different. You can take the exact same house, pick it up. We just sold a house for like $411 in one area. We're gonna rebuild it again soon. In another area, that house may be worth $850. How does that happen? Location, location, location. It's the most important thing in real estate.
It ain't all the time the house. It's the spot it's in, the location.
It's the location.
Yeah.
You know, it's exactly true. But a lot of times we get so caught up on the house. That's why it's important to do your research when you're buying a house. Don't look at this house, oh, I love these countertops, I love this house, I love the paint, and then your kids getting beat up every day in the neighborhood, you know, or you getting robbed, you know. So you got to kind of do the whole research on all of it. You know, me personally, I may not go for the brand new house in a neighborhood because I focus on, my wife is a teacher, we focus more on schools. And that's another thing. Some people want to, I have a client right now, they're willing to spend less money to kind of, you know, send their kids to private school. You got to make that decision. I don't want to pay for private school. I want my kids to go to school in the neighborhood of where we live because I don't want to spend money on private school.
Right.
So that may mean I spend my money on the house. There's no right or wrong to that. You just have to have a conversation with your significant other about what you want to do.
Personal preference.
Personal preference.
Yep.
You know, Woodward Academy is a school in Atlanta with a lot of prominent athletes, and I saw the Chick-fil-A owner of Chick-fil-A. He bought a house with me the year before last. He has 3 boys going to Woodward Academy. Woodward Academy is college tuition. The price is the same. You know, would I want to do that? No, I wouldn't want to do that because again, what happens if I stop selling houses?
You in trouble.
I got to tell my kids we can't go to school.
Right.
I'm not saying there's nothing wrong with that. I'm just saying it's and for me too. If I buy a house in a more a neighborhood with a better schools, I feel like the value ascends faster. It makes it more marketable. I can sell that house and get that money back when the house that I'm in now, a house that sold in my neighborhood was closing soon. Somebody offered $30,000 over asking price, I believe, and they guaranteed it, so they're going to pay over appraisal. That helps my comps. That's another thing. Never have the most expensive house in your neighborhood. My house costs $40,000 less than my house next to me. I don't live on the corner. I live right next to the corner lot, and they spent $40,000 more than I did.
So that boosts your equity.
Progression versus regression. That's what I want. I don't want the most expensive house in my neighborhood. I never will live in the most expensive house in my neighborhood because I benefit from them. They don't benefit from me. You know, that house that just sold, that's going to sell around the corner, now all of our houses' value is going up. And that's what's happening everywhere. It's really, it's kind of scary what's going on. I'm not celebrating what's going on at all. I'm not like, oh yeah, man, you know, my house is just instantly $30,000 more. No, because we're going to hit a ceiling somewhere.
Yeah.
You know, and it's pricing so many people out who would normally be able to buy a house. My first house in Georgia, what I paid for it, I remember me and my wife, our budget, we were not going over that budget. Now that same budget, I'm so discouraged for the average home buyer what they get for that price.
It's almost, that budget probably almost laughed at now.
We bought a brand new house for our budget. Brand new. Nobody ever lived in it. It was in a decent neighborhood. We were okay with the schools. It was just so far out that we did move further out. That's another thing. You can, you know, the further out typically you go, the least expensive houses are.
That's why I'm where I'm at. You tried to get me over there close to you.
Yeah.
Nah, well, I'm good, well met. Yeah, and I told you that.
He did really well. He
Yeah.
bought a really nice house in a really nice neighborhood. And that same house coming further in the city would have been more expensive.
Way more expensive.
Way more expensive.
So location plays a pivotal part.
It's the number
Big
one.
road.
Number one. Number one. Number one thing. Number one thing.
Well, yeah, we're gonna end it right there. That's been the end of episode 4. It's been a great one. We're definitely gonna do a part 2, maybe even a part 3, because this a never ending topic. If y'all have any questions, let us know. If y'all trying to buy a house, you want life insurance, these are the guys to talk to.
Definitely.
Very insightful. And, make sure y'all get at Shay. Bringing the bar.
Bringing the bar to you.
Magnificent, marvelous drinks. We had these brothers come on here today and give us some great knowledge. It was a great episode. We'll see y'all next time.
I want to applaud y'all for having this conversation because we need to have more of these. Because again, you don't know what you don't know.
Exactly.
I never had a conversation like this in Glen Addy. We didn't have this kind of conversation.
No.
We looked up to the dope boys. We talked about who had the nicest car.
Right.
You know what I'm saying? But really, when you think about it, they had money like that. They wouldn't live where I live.
Exactly.
You know what I'm saying? Well, I didn't know that at the time.
Yeah, but you learn
You know what you
something
don't know.
and you teach
So
something.
that's a whole nother segment by itself.
Shout out to Young King's Vision. Shout out to DJ Zay. Shout out to I don't know his name.
Teaching, you passing that knowledge off to your kids.
That was all right.